Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Oana.
So every month we do a market update. The market update specifically that we do is only for homes. It's only single family homes. So it's a segment of the market. We had somebody comment on one of the videos and said, hey, you said there's like 1,300 houses, but I'm seeing data that there's actually more than that. What am I missing? And well, part of it is we've split the market into a segment, single family homes. It's more measurable, and you can get meaningful data from that. You don't have to have, you don't need to look at the whole market. You can just look at a piece of it. Central limit theorem, you actually don't even need a small segment of a random sample. Mm-hmm. That's how the central limit theorem works. So when you take the housing market, you just single family homes, that's the housing market. You can literally 99.9% exactly how the housing market is now.
Well, so particularly here in Las Vegas, we are primarily single-family homes, so that's part of the reason why that's the data that we use when we do the market updates.
Yeah, and if you're in New York City, where they have a whole slew of property types that we don't have, like co-ops, and they have a lot of high-rise and things like that. So what we're going to do is just look at condos. So we're going to start with the first slide. Now, this first slide is the market action index. Now, if you remember, it was like 79 or 80 for homes. It's 92 for condos. It is a hot. It's a smoking hot seller's market.
Right.
Like the stuff we're going to show you is going to blow you away.
Right.
It's crazy.
So shout out to Brad, because we were talking about this yesterday. We were talking about the difference between a condo that is a much more desirable or piece of property right now because they are in a lower price point, so more people can afford them, versus a single family home that is at a much higher price point. We know we've kind of talked about this. The average single family home now is over $500,000. So a condo that's maybe a couple $100,000 is much more affordable. It's much more accessible to a lot more people.
The last month market action index was closer to 90. I think it was 89. So it's jumped up. It's gotten hotter. We expect to see this through the spring, and then it cools. But even when it cools, it's probably going to be 80 because there's just not many condos on the market. Okay, so first thing we're going to go here to is the median list price. Now remember that the solid line is a 90-day average. The dashed line is a 7-day average. It's a leading indicator. 90 days looks backward more, so it can tend to be lower. But the 7-day, it's 260. Okay, now remember it's 200 plus, almost 300,000 more than that for homes. I think it was 570.
I think it was like 511. I think was the last number I saw.
It's over 5. Watch that video, the one that we just did on Las Vegas. Okay, so condos are pretty expensive compared to how they were in the past. If you look back to April, the bottom of this chart is 180. So we've had really strong appreciation, and it doesn't look like it's gonna taper off. It's going vertical. Okay, price per square foot, the same thing. You're seeing the same trend. Now there's something interesting here. I want to show you this because you're gonna be like, wait, that doesn't make any sense. Okay, so price per square foot's about $240. Now, there's an interesting thing about a condo. When you buy it, you don't get land. You don't own any land. You technically only own the walls. If you buy a townhome that's attached, you generally get land with it. You have front and backyard, or maybe you have a side yard, but you tend to have a piece of dirt. So this price per square foot is going to be different than a house, because the same size house is going to be worth more than a condo. So if you have 1,200 square foot condo, a 1,200 square foot house in a comparable neighborhood, the house is going to be more per square foot. It'll be like 300 or 280, because you're also getting land that averages in, because the price per square foot's not just the house, it includes the land.
Right. Which is why, a lot of times people say, well, a single story home that's the same size as a 2 or 3 story home is more expensive than a 2 or 3 story home. And again, it kind of goes back to the same thing that Todd just said, because if it's a single story home, generally it has a bigger footprint, so it requires more land than a home that's 2 or 3 stories. Generally those have less land, so because they require a smaller footprint because they're more vertical.
And if you go to a new home subdivision, then what you're going to find is you'll say, oh, I really like this house, I want to put it on that lot, and they'll go, no, that lot's reserved for this other floor plan. You can't put that house on that lot. You have to put that house on this smaller lot. Or if you're buying a 1-story, you probably have to put it on the biggest lots. And if you're buying a 2-story, they want you to put on the smaller lots. And that's the reason why, is because they're trying to make the neighborhood, they don't want someone to take a 1-story and put it on a small lot and take up the whole lot. And then the neighbors are all really close. And then somebody puts a 2-story on the corner of a lot because they're trying to get a massive yard. So they don't let you do that. So that's totally accurate there. Now, this is what's really cool here. Inventory. Look at the inventory. It's that bottom number is 500. It's below that. I think it's like 387. It's under 300 units.
So remember, this is Las Vegas that we're talking about. This is not a national number.
No, these
are Las Vegas numbers.
That is extremely low. A normal market here, if you go back, is 2,000. 2,000 is probably the long-term average. It goes up and down. Wow, that's pretty low. I mean, if it was 2,000 and now it's 300 and something, it's about 11%.
Right, which makes my point that I kind of started earlier, that condos are in high demand because they are more affordable, because homes are getting so expensive. I think one of the things that's interesting to note is that when you look at condos, they tend to have a higher homeowners association fee than single-family homes. So that I think that's something that at times people forget about.
Yeah, especially for investors, because investors are always like, oh, I want to get started, so I'm going to start cheap. I don't want to take a lot of risk. I'll go do a condo or whatever. And there's problems with that. We should do a whole other video on that, because one of the problems is sometimes you can't get a loan.
Right.
Some of the communities don't qualify for FHA or VA. You have to get conventional. It means you have to put money down or you have to pay cash.
Right.
The other problem is you may be you're going to get less less rent per month in a condo than a comparable house, right? You get more. And then you also have to pay this fee. You can't, it's not like you're going to collect rent and then you tell them, oh, you have to pay the $150 or $200 a month association fee. You have to pay that out of your proceeds, because market rent is market rent.
Right. The other thing that's kind of interesting is this is just here in Nevada, so doesn't apply to maybe other places. But what we've done here is, right now, when you get your homeowner's insurance for a condo, it actually is less than it used to be, because now the condo associations have to insure the structure. Because they had issues in the past where maybe there was a fire and the homeowner didn't rebuild that section of the structure, and of course that negatively impacted all the attached neighbors. So now the association is responsible for the whole structure. So your homeowner's insurance is more like renter's insurance, because it basically covers the interior of your unit rather than anything else. So that is a little bit of a savings. So it kind of mitigates that higher HOA fee maybe than you would have in a single family home, where you've got a higher homeowner's insurance than you do with a condo.
Okay, we're going to show you this last slide here, market segments. This is the one that I think is going to blow you guys away. Okay, so we have the 4 quarters. The top quarter is the median price of the top quarter. So it means 1/8 of all condos is over that 460. And then the bottom number, that 190. 1/8 is below that. What's really incredible about this is the number of days on the market. So it's 7 for the middle of the market, for the middle 2 quarters. It's 14 for the top quarter, and it's 21 for the bottom quarter. Why that's interesting is if you look at houses, the days on the market for the top quarter is a lot more, because those are luxury homes. Those are all $1 million plus homes. And then, but the middle of the market there, those homes, call it 200 to 300,000. Those things are flying off the market. The other thing is, you're probably wondering why it's longer days on the market for the smaller units. And what's probably likely is some of these units are much older. As you see the age, it says 40, and that's a median age. You probably have some older ones in there too. Chances are these are 100% have to be purchased with cash. So you have a smaller buy, even though they're lower prices, you have a smaller buying pool, because this is an entry-level product. And entry-level people are getting loans.
Right.
But the sweet spot of the market for them is the middle of that. It's, 250 to 300,000. They can all, like everybody can get a loan for that pretty much.
Right. And I think what you're also seeing there is that these units that are older are functionally obsolete. And so it would take money to get them to to current standards. So people looking at these entry-level pieces of real estate don't have that kind of money. So if they don't have the cash to bring these properties up to today's standards, then they're going to stay away from that, and they're going to go to something else where they don't need the cash to make it more livable. It is already livable, and they can just make the monthly payment the way they were making their rent payment.
Something that's kind of interesting onto her, it says lot size 0 to 4,500 square feet for all of them. Technically a condo, if you go in the MLS and look at lot size for any condo, it's 0. It's that's what the number is. Like if you put a number in there, you get fined because it's a 0's a lot. You're like, well, but it's a 1,200 square foot one thing, so I'm over the ground of 1,200, but you don't actually own the land. That's the thing. Even if you're on the bottom of the bottom floor, you don't own that land under you. It's a condo. You own the vertical only from the floor to the ceiling and the walls, so you don't actually have lots. It's kind of goofy, but you don't have lot space. You don't own the lot. You own the space, but that's it, which is why it's a little bit different. We also have a different product here called high rise. It is highly likely that does not include high rise in these numbers is condos. It could include high rise. Our MLS intentionally added a thing called high rise to reflect the strip and one or two complexes we have off the strip. But pretty much when we talk about condo in Las Vegas, what we're talking about are those, you drive by them and they look like apartment complexes. And they're actually, and a lot of them were that were converted. That was a huge thing that happened in the late 90s, early 2000s. The companies that come in buy apartment complex, they would just basically start refurbishing the whole thing, and then they would sell the units off one at a time as condos. So that's where we get most of our condos. Actually, they were previously apartment. They weren't built as condos; they were built as apartment buildings. Yes. And then, of course, newer stuff is not as there's far more older stuff, which is why you look at the ages. These, even the top quarter median age is 23 years for the top quarter. Like the nicest, biggest ones on median is 20. Means half of them are over 23 years. That was 19 something. That was the last century, right? Last millennia.
So that may not seem like very old wherever you guys are, but in Las Vegas, that's ancient because Las Vegas really doesn't have that many older properties if you think about it, because Las Vegas didn't get to be this size until relatively recently. So remember back in the 70s, Las Vegas had about 80,000 people. So we didn't have this many homes and this many units. So everything really that is out there is since the late 70s, early 80s.
Okay, this would be a fun video to do. What if we went and found the oldest house in Vegas that's still being owner-occupant, like someone's living in it? If we find out what house that is and go maybe see if they would let us see it, they might.
That would be fun.
I'm guessing it's from the 1930s. The Vegas didn't become a city until 1905, and whatever structures existed back then have all been, because they were all in the downtown Las Vegas, they've all been removed. But there's a couple streets like 5th, 6th, 7th going that way, which is now Lawyerville. Those are the oldest original houses that are still here. And like Juana said, most of them are functionally obsolescent because they're not designed for a way we live today. And a lot of it, so they've been turned into offices, attorneys and things like that. But I'm sure there's some house that's out there that was built in the 30s that's still a house. And, maybe that would be a fun video to do. Anyway, we wanted to do this kind of segment update just on condos so you could get a feel for what's going on. Inventory, we don't have it.
Right. There really isn't any condo inventory, like we said, because this is an entry point, and almost anybody can enter at this price point.
Yeah, this is the entry point of the market. So anyway, if you like the video, please share it, tell all your friends, hit the notification bell, and leave us a comment.
Yep. Subscribe, and we'll see you on the next video. Bye.
Bye.